Fantastic. All right, we're about to start the before last session. That maybe I said last session before. Fantastic. Real world assets, which has been a really big one, actually from the inception of the Crypto Valley many, many years ago. And we have one of the best journalists that I do know from the big whale here, Raphaël, coming to do this. So I think it's going to be a great session. So let's give them a round of applause and stay tuned. Thank you.
Hello everyone, I'm Raphaël Bloch, co-founder of The Big Whale. I'm based in Paris, and yeah, I'm very glad to be with you today, because the first time I came in Zug, it was in 2017, so it was, quite a long time. And yeah, it's really interesting to see that Zug is still in the crypto map, especially with this conference, and we can gather many panelists, builders from the crypto space, and also from the traditional world. And I'm very excited to moderate this panel, because I think that this is a very nice subject. When we talk about blockchain and crypto, it's more about economical and technical things, but I think that the ability not to lie with the blockchain is really interesting, and maybe it's the biggest part of the value of this ecosystem. So I will host, and I invite my 4 panelists to come and sit with me. So Fatmire Bekiri from Signum Bank, Stefan Rust, Stefan Rust from Troflation, Pritam Dutta from Zot, and Niklas Kunkel from Chronicle. If you could just introduce yourself in 30, 40 seconds, it would be perfect. Thanks. Fatmire, if you want to start. Thanks.
Thanks a lot. So thanks for having me. My name is Fatmire Bekiri. I'm responsible for the tokenization department at Signum Bank. I'm since 3 years with Signum, and prior to that, I used to work in consulting and traditional banking, and I'm very happy to be here today with all of you. Thank you.
Yes, Stefan, go ahead. Yeah.
Hi, I'm Stefan Rust. I've been in crypto for over a decade. I was the CEO of Bitcoin.com, and then in 2021 decided to launch Truflation. When the government shut down the economy, printed a lot of money, we decided that the world needed to have accurate data and real data to make better investment decisions. So we launched a data stream network that allows anybody to build indexes on top of this data stream network, 18 million items that are tracked with 3 price feeds per item. And we work very closely with Chainlink and Coinbase and Nomura Bank as well.
Okay, cool, thanks. Pritam, if you want. It's working? Okay, cool. Yep.
Hey everybody, Pritam here. Been building Zot for a year and a half. Zot primarily brings yield products on chain, both RWA-based yield, which is typically trade finance and money market funds, as well as permissionless yields, which includes yield aggregation areas across various DeFi platforms. Prior to this, I was with Budweiser, not really selling beer, but NFTs, and building a fintech business primarily around...
we got chocolate, we didn't get beer.
Yeah, that's on me next. And yeah, really looking forward to kind of this event, and yeah.
My name is Niklas Kunkel. I've been in crypto for about a decade now. Was part of the founding team of a tiny project called MakerDAO. We did a lot of stuff there, including the first Oracle on Ethereum, the first DEX on Ethereum, the first Solidity debugger, and also this thing called a stablecoin. So about 2-3 years ago, my team spun out of Maker, and we started Chronicle. And so what Chronicle is essentially this Oracle that we had pioneered at Maker, but now productized and open to everyone. So today Chronicle is the 2nd largest Oracle by value secured, just after Chainlink. We secure over $10 billion in crypto assets, mostly through the major DeFi protocols, including MakerDAO, Spark Protocol, and Morpho.
Okay, thanks. So I have many questions for all of you, but I would like to start with one very direct and maybe a little bit provocative question. And with you, Fatmire, so if real-world assets do not lie on the blockchain, can we say, that in the traditional world, people are lying to us? What do you think about this? Is the blockchain the solution?
So I think it's needless to say that lying requires negative energy. So if you want to lie, then you're going to do it anyway. So when we speak about real-world asset, so since the verification is taking place off-chain, so I think to a certain degree we lie the same as on and off-chain. Because, for example, if you tokenize a piece of art and you lie about the condition of the art piece, so it doesn't matter if you tokenize it or not. So you need to have this negative energy behind it. But where blockchain clearly helps is that you have this transparency where you don't have it, for example, in the traditional world, you have transparency. You know how many co-owners you have, for example, when it comes to, as I said, art, for example. In the end, I think when we speak about real-world asset, we need to trust still the tokenizer, the issuer. We need to have a good governance in place, bulletproof legal frameworks, and so on and so forth. As I said, as long as the verification of the real-world asset is taking place off-chain, we have also to trust who is custodizing this piece, and so on and so forth. Yeah, this is how I see it.
And Stefan,
what is
you explained that, so you launched Trueflation because you thought that, the government so printed a lot of money. So do you think that, blockchain is, the perfect solution just to provide the good information, especially regarding economic figures and maybe real-world assets?
So is it perfect? I don't think so, but I don't think anything on the planet is perfect. And if it were perfect, we wouldn't be needing to improve all the time. So I think we still have to improve. I think why I did with Trueflation what we did is I did not trust the data. I did not trust somebody that berates us and tells us, don't worry, we'll look after it. Don't worry, we will solve the debt. Don't worry, the inflation won't come, it's only transitory. All of those statements I didn't believe, and that's what really gave me the energy to go in and build Trueflation Stream Network. We knew from the beginning that there is an inherent trust in number one, RWA, number two, STO, and number three, security token offerings that took place that were very popular if anybody was around in 2017. And by the way, we're in 2024 and we still don't have STOs. And then the third element was really, how do we address the inherent mistrust to real-world price data on the blockchain? Because there's a human that's going to come and put a price in. And so the way we did it, on the Trueflation Stream Network, we have 6 infrastructure partners that are helping build a decentralized network of that actually verifies the source. Not only do we verify the source of data provider who is whitelisted and has skin in the game, we have 3 price feeds for every single source or item that we track. And then we have a consensus algorithm that manages and monitors different price variations between the individual prices. And so that's how we've tried to address the verification process and making sure that the data doesn't lie.
Okay.
And anybody can dispute it. Anybody can, and then when it gets disputed, it goes up to an arbitration process.
Okay, and how is it economically sustainable? To have so many people to check, and how you check the, fact checkers or the data checkers?
So we've built this out for the indexing industry. And if you look at the indexing industry, just look at indexes. There's one index that is the MSCI World Index. Morgan Stanley, blah, 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 something index. That is a $65 trillion product. One single product, $65 trillion in market value. And so if that index can do that, and people trust that, there's a lot of money to be made by bringing this index business from this murky, centralized conglomerate owned by 3 big hedge funds, by the way, around the world that control what data, the methodology of calculation, the injection of different types of companies. All of a sudden, I can now have that on the blockchain. This industry is going to be $1 trillion by 2030. If it's $1 trillion by 2030, then there should be enough money for participants to want to build on this. And by the way, we have 60 data providers that are contributing their data in return for truth tokens. We have 6 core infrastructure developers that have about 6 or 7 developers on their own each working to improve the concept of the Truthflation Stream Network, let alone customers and consumers. We have Wall Street consumers, we have hedge funds, macro investors that are consuming the data as well. We started a bit more centralized, and we're trying to decentralize ongoing so more people can share and participate. Sorry, I'm hogging the mic.
No, it's perfect. Pritam, your thoughts about it?
So I think, very similar to Stefan, we are also part of the Chainlink ecosystem. And one of the things, for example, in our case, we bring traditional products on-chain, providing yield for crypto users. So, obviously, we started with crypto-native customers, which is treasuries, hedge funds. But what we are seeing, especially from Middle East, where I operate, that a lot of new-to-crypto institutions are coming in. Now, where is their money going? It's primarily the top 5 crypto assets. They don't do any degen staking. They don't do anything else. But once you have got access to your crypto assets, you are not going to trade it daily. How do you get yield on top of it? And how do you ensure that there is a very transparent mechanism which provides them with the safety, the sense of security that actually lags in the crypto world? I believe that we are in an industry which operates from a very low level of trust. And products like Index and products like, having a clear proof of reserve, provide that sense of trust, which is very basic needed to grow this industry to like $5-10 trillion industry, which doesn't exist as of today.
And Niklas, about this, what's the main advantage, to tokenize the real-world asset and to have them on the blockchain?
Oh, well, I think this is a question that VCs should be asking real-world asset projects much more than they maybe have been in the past. I think there's a bit of an identity crisis when you look at like the RWA landscape. I think there is an army of people who want to be asset originators and couldn't tell you the first thing about who their magical customer is on the demand side who's going to be buying any of this stuff. I think if you look at the data in terms of like, not just who has launched an RWA, but like who has actually grown it to like hundreds of millions, billions of dollars in scale, the picture becomes much more bleak, right? And essentially what you see that the initial product market fit is DAOs. So the talk is always like, institutions will come and buy your RWAs, right? Well, institutions can already buy assets. They're involved in traditional financial markets. Why do they want to come on chain to buy the things they already have access to? So the unpopular answer is your target customer is a DAO. Your target customer is a DAO who has, a treasury. Sometimes a very big treasury, right? If you look at these layer 2s, they I don't want to call anyone out specifically by name, but some of them have over $1 billion in their non-native token. So that is to stay in stable coins, staked ETH, BTC, right? Not like the native token of the L2. So they're pretty sizable in that respect, right? And so where RWAs have really seen the initial traction is in those types of DAOs, or in, I think the one I can probably talk about most concretely is MakerDAO, right? Where with a book of about like $8 billion in assets, 2 billion of those are in RWAs, right? And Maker wants that exposure from a revenue diversification perspective, right? Where DeFi is a very boom-bust kind of industry, right? Which means that when prices start going up, people want leverage, which makes the yield go up, right? For lending and makes Maker make a lot of money, right? And then when number stops going up and number goes down, right, the whole feedback loop unwinds and it goes in the other direction, right? And so from an organizational perspective, and this applies to any organization that has this boom-bust kind of revenue cycle, it's incredibly destabilizing, right? Because you go from like being risk on and investing into all kinds of innovative projects and hiring a bunch of people to all of a sudden, oh, the money gets cut off and now you have to like stop all of these projects that you've invested so much energy into, fire all of these people who have all this domain expertise, right? And so that's kind of like the very unsexy answer, but like the initial customer for all of this is DAOs. Now, is that the ultimate promise of an RWA? No, I don't think so, right? Like the promise of an RWA is that I would say, you know, we have all of this like legacy traditional finance infrastructure we've had built up, and it kind of all plays together with duct tape and bubble gum, and this is our chance to kind of do a refresh and say, here's a new container. We can all agree that we're going to use this container to, you know, settle and trade assets. And like everyone can agree, let's use this neutral infrastructure.
I just would like to hear you, Fatmire, on this. You're not a DAO, but I think that Signum is working on those kind of things. What do you think about Niklas, what just said about the fact that it's maybe more for DAOs rather than the traditional finance, for example?
Yeah, I agree to a certain point, absolutely. I mean, the recent project that we did, so we see really a demand from these kind of clients that they really appreciate if they have real-world assets on-chain, if they have a proof of reserves and other things on-chain. But I believe that this is just the beginning, and I see now a lot of traditional players coming into the market. So yeah, but for the time being, I agree, yeah.
Yeah, and
we tokenize only things, not just to tokenize it because we can tokenize it, but it's really important that we see that there is demand. And yeah, sometimes you do things, you start with something, you see if there's a product market fit, if yes, you continue, and if not, then you have to further evolve, and we have to accept that we are at a very early stage, and we learn as we grow, yeah.
Yeah, and we saw that BlackRock tokenized the fund. Do we need to tokenize everything, or is it more relevant? Yeah, you think?
Yes.
Everything. Everything, okay.
We need to tokenize everything. I mean,
yeah, take the mic.
Today, if I want to trade commodities, where do I go to trade commodities? I have to find 15 middlemen, 7 toll takers along the way. It costs me a lot, and then I have to know somebody to go to one exchange that centralized controls access to that exchange and charges a significant premium. And only 15 banks make $100 billion a year just trading commodities on behalf of clients. If I can open up that market, how can somebody in India, 1.7 billion people that want to participate in oil? I believe in the EV cars. I believe, how do I get part in nickel, in platinum, in palladium? I can buy a synthetic version of that. I don't need to wait for regulatory approval and permission. I go to Dubai, and then I go work with Coinbase, who have a tokenized oil token. I can then list that. I go through Chainlink. I can put that on 27 different blockchains simultaneously, have a centralized treasury that's governed with proof of reserve. Boom, you're off the market. I can make that available to 1.7 billion people that historically have not been able to access that.
Yep. I mean,
we need the cojones to go and build this stuff.
Yeah, I can see this.
We need the balls and the guts to take on the regulators and the governance and the financial institutions. And if we don't have those balls anymore, then we'll just be compliant, we'll move very slow, nothing will change.
Yeah.
Because we don't need to change. The people that are in control, they don't want to change. Why would they want to change? They make all the $100 billion. We're here to change that.
Yeah.
I'll stop there quickly.
Yeah. Pritam, you want to?
No, I'm just adding to Niklas' point. You know, one of the things which in crypto we see that we focus more on the tech but less on the customer journey. So a very interesting story, we met one of the top 5 treasury managers, and you know, we're talking about how can they allocate more to on-chain funds, and their response is that we already do like off-ramping and allocate it to direct treasury. I don't even want to take smart contract risk. So what we really believe is that there is a very thin line between you know, tokenizing everything and like like the point that Stefan mentioned, I think the first wave would be products which have very clear established price oracles, very clearly established kind of regulatory oversight over it. I still believe that other products which are more localized, say to some extent real estate will take a much longer time, because the kind of I would say price sensitivity and the mechanisms which drive price is still not there. So yeah, I think the first wave that is currently working is the more globalized products with stronger price mechanisms which can determine the pricing for those.
And with the blockchain, it's more efficient, but it doesn't mean that it's, more relevant, that the numbers are more accurate. For example, talking about oracles, we need, to guarantee that the data is okay. So what do you think between efficiency and the fact that we are talking about lie and truth on this? We can have a more efficient system.
There's nothing more transparent than on the blockchain, right? You see all the transactions, you have an open ledger. And at the moment, we are heavily reliant on a piece of paper that tells us the truth, that is put forward by a company that we hope and pray is true, that we believe, maybe it's audited by a Price Waterhouse or Anderson Cooper. Anybody remember Anderson Cooper and Enron? You look at numbers, you believe those numbers, versus an open ledger that's public for everybody. And if you look at the policing that takes place on the blockchain, I don't think there is a community that actually holds a lot of the protocols accountable. From all the big protocols that they're managing their treasury multi-sig, it's not on the blockchain. I don't believe that transaction. Or there's somebody released a wallet, released X number of Bitcoin that got listed on an exchange. They're going to dump. Everybody sells, right? So you have immediate transparency on, which you don't get anywhere else, I don't think. And then at the moment, it's not perfect, but I think we can improve on that.
Niklas? And Fatmire.
So where I would disagree here is that, a key part of real-world assets is that they are not crypto-native. They don't inherit these implicit transparency and, ownership properties that we have with, say, like a token like ETH or any kind of alt token that's issued on chain, right? And so
a synthetic version of that.
Sure, but I think at that point we're stretching the definition of real-world asset. But I would say maybe we disagree on what the scope of a real-world asset is then.
Typically, maybe you can just say according to you what's.
So typically when we talk about tokenization, we're saying that here is an asset in the real world, right, and we are going to transcribe it onto a ledger. And as soon as we do that, right, if we want these transcribed assets to have these great, amazing properties that decentralized systems have, that's when kind of oracles become much more important from an interoperability layer to bring all this data on chain, right? And it's totally possible to bring the data on chain, but you still have garbage in, garbage out, right? So if you're getting the data from excuse me, like an asset originator, this is just recreating some BS, right? Because this asset originator has complete moral hazard to lie to you and tell you whatever great picture you want to hear, right? And so when we're very early in this RWA tokenization industry, and I understand we have to take baby steps, right? So we have to learn how to build the products, right? We have to learn, who is our customer, right? We have to build up the corresponding infrastructure. And it's not going to be perfect, right? The first time around, or the second time around, or the third time around. But we also can't delude ourselves into not being aware of the complexities that we're just kind of hand-waving away right now.
Yeah, actually I agree with you. It's really easy with crypto-native assets, to be sure that they are on the blockchain, they are natively on the blockchain. But how to manage the fact that it's way harder for real-world assets, for example, in the real estate world or whatever, to be sure that
So if I look at the model that you just highlighted, I 100% agree. I could not agree more that if we wait to tokenize this building and compartmentalize it, get the land registry to give us the land registry, and encrypt all of that, verify that that's authenticated and it's from the right source, etc. That's going to take,
decades.
I'm too short. My life is too short to wait for that moment. So I will not be looking at that. But I look at innovations that are taking place today, that actually compartmentalize and tokenize the square foot price of real estate in Zurich. And I can buy a token that represents that square foot price in Zurich. Remember, 16-year-olds to 29-year-olds around the world have no access to real estate. They cannot afford to get onto the ramp that all of, the inherited down from family to family, the real estate that's been transitioned, etc., they don't have access to that. How do they get onto this? And so their way is, I can buy a token that represents the value of New York. And by the way, consumer price index is jack shit. Who cares about the 2-4%? What matters is asset price inflation. And asset price inflation is up at the 12% range, right? So you need to break 15% hurdle to hold and protect your wealth outside of Switzerland. I mean, Switzerland is, has different, but asset price inflation is pretty high in Switzerland, right? Property is pretty well high, Anyway, sorry, I digress. But that's where I think this is going to go, much more so that ultimately you're creating synthetic versions of it, and the innovation is going to happen in that realm, right? I'm going to tokenize an index. I'm going to tokenize a futures product. I'm going to tokenize tradable items that people can trade on. And that's where I think it's going to go.
Fatmire, on this?
So I forgot what I wanted to say, but no. So what I said initially, so we still have to rely on prices coming off-chain. So when we think of private markets, someone is performing valuation on these assets. So as my colleague just said, like garbage in, garbage out. So we still have to trust. Blockchain is not going to solve this for the time being. But we can see on-chain, for example, if an asset had a valuation 2 years ago, what is now, and so on and so forth. And if you create this kind of synthetic products that you said, so I agree to some point, but you still have to be sure that, when you go in front of a court with this token, that you really have the right. So we cannot just simply ignore the regulation or the legal framework, even if we have the balls or not. So me as an investor, if I buy a token, and this is how we do it at Signum, for us it's really important that we work very close with the issuer and we understand what the token is actually representing. Because if we issue a token in a synthetic form, I don't know what, but the risk that at some point you go in front of a court and the token is worth nothing. This is really what we have to avoid. And I don't like so what I want to say, we should not ignore the regulation. We have to take the baby step, and I don't like these conversations as well, but I don't see really a way around it.
Yeah, just adding to what Stefan said, if you take a step back and look at who is actually buying RWAs as of today. Like traditional players don't really need to buy RWAs, who are being bought by treasuries and a couple of other players. But nobody buys RWAs for the sake that I really want to get access to that asset. Means what? Like if you look at the psychology of a typical customer, like buying a tokenized real estate, for example, is just for the appreciation and the price, and not really the underlying asset, because you holding possibly 1/1000th of a share of an asset, and you are never going to have any physical ownership right on that. So what we strongly believe is that RWAs are positioned towards like a more of a basket of products. Say if you are, as more and more holdings of individuals and institutions grow in crypto, people would like to have assets which have, say for example, some kind of real world linkages, both for the price appreciation and the yield on top of it. And it will be like more like a portfolio allocation. At one end, you have products which have very high, say DeFi native staking products, as well as top crypto assets, and at the other end you'll have RW assets which will be seen more as a wealth preservation or more like towards like you would have as of today with any other portfolio allocation. So I think that's where things are. Major challenge as of now with RWs is that there are only 2-3 products which have found to scale or true adoption with treasuries and the whole crypto community, and there are very few which have really scaled. So I think the market is still very niche, and there are very few products which have found scale as of now compared to other digitally native products.
Okay, and according to you, what's the best leverage for this sector? To democratize real world assets. What do we miss today?
I think I think Niklas added a point that everybody is focusing on origination and tokenization. Like I met somebody like a few days ago, and he came with me a list of 100 million assets he wants to tokenize, including a beach house in Panama. My first question was, who do you think will buy that? First of all, how should I validate that house is worth 10 million or 20 million? I have no clue. And I just want me to take your word, put it for a 20 million SPV, and then you run out, and then I chase the whole structure to figure out what happened. Yes. It's never gonna be scalable. So I think the first challenge is liquidity is an issue in the RWA sector, and we need to figure out products first, like synthetics that Stefan mentioned, or like yield products which have strong established protocols to start with, and start with them. The reason like some of the treasuries and money market products are so popular is because there is a clear price oracle, there is quick liquidity, and that's what works in crypto. So start with that and then go for products where it's much more harder to establish price, and then go from there. So I believe these are very few products where we kind of start with and focus on.
Okay. Niklas, about this, maybe?
Same question, or what's...
Yeah, actually.
What do we need? Well, a big influx of capital would be nice. No, I think in terms of like the development cycle, we're seeing the maturity come along, right? But there's a lot of moving pieces here. Right? There is the regulatory question in different jurisdictions, right? Because it's very jurisdictionally dependent, right? Can we get some reasonable crypto policy in place in the US, depending on the elections in November, right? Can we do so here in Switzerland, in London, in Singapore, in Dubai, right? That's one part of the equation, right? The other is, can we build these products with a set that has a level of maturity that gives right investors confidence in these assets that they're buying, because while there is a lot of quick and dirty like RWA, we tokenize this house or we tokenize this property and you can buy a piece, a lot of the time the legal strength backing your claim is rather weak, right? And so coming up with these structures, right, for the most part, what you see is it's very bespoke, right? If you talk to any of the RWA asset originators, right, we do this in Jersey, we do this in BVI, right? And they all have their very unique structure, right? But or in Switzerland, right?
Yeah.
But over time, right, there will be consolidation, right? And unfortunately, that consolidation is going to come at the price of like, well, this one blew up. This one exit scammed, right? This one just doesn't work from a tax perspective, right? But we will identify those structures. We will see consolidation. It will make the surrounding infrastructure, not just oracles, but anything else, much better, because we don't have to do one-off bespoke implementations for every single asset originator that comes to us and like, can you do an oracle for our RWA, right? So it's not any one thing, right? It's everybody has to make these take these steps forward, and then the whole piece will kind of come together, but it's going to take time.
Okay. Thank you very much. We have only 4 minutes left, just for maybe 1 or 2 questions from the audience. If you have any questions, feel free. You? No? Any questions? So, Pritam, if you want to add something.
Yeah, sorry. Yeah, I will just want to add, if you look at data, it's also very, clear. You look at the top 5 RWAs products by the number of TVL and look at where is the TVL coming from. The top 2, pretty much everybody knows them, with close to half a billion worth of TVL. 70% of the TVL is coming from just 2 institutions. So, retail is still not there in terms of product usage. So unless retail is there, the sector won't go big. So how are you solving for that? So I think these are some of the challenges. Having a strong institutional backing, I think, is the #1 requirement for a RWA project right now to get the liquidity bootstrap for the first few years, seed Series A phase, and then kind of have a clear strategy of how you are going to get retail, because without that, it's not scalable.
And you will find banking partners like Signum.
I just wanted to add, we tokenize on the Swiss law, so not anything else. Yeah.
So it's working. So maybe the last question. So about blockchain, of course, we need to use public blockchain, I assume. But on which one you think that we should, or maybe cross-chain, we should tokenize real-world assets?
Yeah, look, I mean, I'm an entrepreneur. I'm an entrepreneur, so I'm by nature going to be positive, and I think this is the best time to be alive. We have so many innovations taking place, and if we do not take advantage of these innovations, we won't achieve growth. And the governments have torn us down a path with debt that is insurmountable anymore, and they've put on bureaucracies and lawyers into stopping entrepreneurs build and drive growth. Either we can constantly sit back and be negative and not believe in the future, or we can be positive and take the leap of faith into the future and try to make differences happen. And that's where I'm coming from. I think the blockchain, crypto, AI is out of the bag. You're not going to stop a $3 trillion business. And that's why the institutions are coming for this. There are going to be thousands of blockchains. Don't think there's going to be one blockchain. There are going to be multiple of oracles. There are going to be multiple of banks that will have their own blockchain that will interact with other blockchains. And obviously, I'm going to be very proud of Chainlink that does the CCIP that connects all of these banks and the digital and physical world together. But, blockchains are going to be blockchains. And look how many layer 1s there are. I think you have said it right. There are not enough dApps. We need to build services that users can engage with. And at the moment, we don't have those. And that's where we need the entrepreneurs out there to come and help build and work with real institutions. And I don't want to advocate going against the law, right? I mean, we don't want to go to jail. Nobody wants to go to jail. We want to stay on the right side of the law, but we have to push the boundaries. If we stay too far in safe mode, we will never go into beast mode. And we have to be in beast modes at a certain part of time to push the boundaries and the thinking. Switzerland did a fantastic job with Ethereum, but now look at what's happening in Abu Dhabi. They're launching, all the companies are moving to Abu Dhabi. The brain is going to Abu Dhabi. And because why? They're much more crypto friendly. They're issuing futures, tokenization of futures products and real world commodities. And then guess what? Next is going to be Lisbon again, because tax benefits, people are going to go build there. And so you're going to see more innovation happening, not just on a blockchain by blockchain basis, but think of a blockchain as a country. You're going to move from blockchain to blockchain to blockchain, wherever it's faster, it's cheaper, and that's what's happened over crypto. Bitcoin forked how many times? Because it was too expensive. Ethereum? Sorry.
Yeah, no, thank you very much. I think that's... Yeah, thank you. This is the end. Thank you very much to all of you. It was very interesting. I hope that you enjoyed it. And if you have any question for our panelists, don't hesitate. And maybe you'll be on the boat tonight, so let's each other. Thank you.